now we're going to speak about the future. Namely, what can we expect in the coming years when it comes to crypto and when it comes to this whole industry. Because crypto is moving very fast. And the next 5 years in crypto is really like the next 50 years in any other industry. We have this notion of dog years, when one dog year is several normal years. Crypto has a similar thing compared to other industries. And to do this, we will have a panel. And this panel will be moderated by Han Kao, founder and CEO of Crypto Briefing. And the panelists are the following: Chris Dannon, co-founder of Iterative Capital; Sam Kazemian, co-founder and president of Everpedia; Emir Hrinich from NUS Business School; and finally, Dave Chapman, chairman of OSL. A big applause and welcome to our panelists. Welcome up on stage.
Hello. Okay, all right. Welcome, everyone. So today's topic is Globalization 2.0. Why crypto? Why now? And what improvements can we expect over the next 5 years? Good morning, everyone. My name is Han Kao. I'm the CEO and founder of Crypto Briefing. We're a crypto news and research company. And let's go around real quick and just kind of everyone can just give a quick intro about themselves.
Sure. Hey everyone, my name is Chris. I'm the founder and managing partner of Iterative Capital. We're a New York-based investment manager that focuses on proof-of-work mining strategies. We also operate the OTC dealer based out of New Jersey called I2 Trading that trades Bitcoin for US dollar.
Hey everyone, good morning. I'm Sam Kazemian. I'm the co-founder of Everpedia, which is the decentralized version of Wikipedia. We're built on the EOS blockchain, one of the largest dApps on there. Also, currently, I'm working on Frax, an algorithmic stablecoin.
Hello everyone, my name is Emir. I am with National University of Singapore Business School. I teach corporate finance and blockchain applications in finance.
Good morning, everyone. My name is Dave Chapman. I'm an executive director at BC Group. We focus on a lot of areas in digital assets, but primarily focus on brokerage under the name of OSL. We also focus on exchange, insured custody, and digital asset white label technology.
All right, thank you guys.
What do you do, Han?
I introduced myself, but I'll do it again. My name is Han Kao, and I am the CEO founder of Crypto Briefing, and we are a crypto news and research company. So yeah, we can let's dive right in, guys. So 3 weeks ago, Facebook CEO Mark Zuckerberg defended Libra in front of Congress. Now, regardless of whether or not Libra succeeds or fails, it's waking up regulators around the world. So what about Libra excites you or keeps you up at night? We can start with anyone that has a strong opinion.
Yeah, so one of the main things about Libra is that it's Facebook's foray into cryptocurrency, and it's interesting that it's a stablecoin. One of the things that I always say here is that right now the market is bullish for stablecoins, and it's bearish for everything else. And something that I always say is in a bear market, it's just a bull market for stability. What's interesting here is that Facebook's dive into cryptocurrency seems to be as a currency use for a medium of exchange. And that's interesting because that's a direct competitor to Bitcoin. I personally think that it's not going to be that successful, but it actually will bring a lot of awareness for the crypto industry, even though there's a lot of regulatory scrutiny here.
Interesting. Thank you, Sam. Chris, what are your thoughts?
Sure, so I think one reason I'm excited about it is not so much from the product perspective. I don't intend to be a user of Libra. I think most people won't be. But what it will eventually reveal to everyone is that the only reason that these public blockchains at least exist is because they are cheaper and more efficient settlement networks for financial transactions. So if you try to rebuild a traditional banking institution on top of that software platform, you are still beholden to the bureaucracy and the operating expense of a centralized organization. And so I think it will reveal, what is the real interest in the world in blockchains when Libra proves to be uneconomical compared to the traditional financial system.
I think it's personally expedited just the adoption of crypto or digital assets as a whole. I can't tell whether Libra will be successful, but it's definitely challenged the status quo. If you look at the governments and central banks around the world that are considering what the world's going to be like with this Facebook-owned and largely operated digital currency, it's instilled an enormous amount of fear. But it's also interesting as to why did they not see this coming. You look at the largest economy in the world, namely China, have been using WeChat and technology to disrupt traditional payment rails for a very long time now, and it's continuing to grow, continuing to be more successful. And so I think personally, I think it's very much welcomed whether it's going to be a success or not. I also personally think that Libra could be that penny drop moment as to why people need something like Bitcoin. There was a lot of the naysayers coming out. Bitcoin's not needed anymore because we have Facebook. It's the largest technology company in the world. They're going to do a much better job. It's going to be faster. The reality is the penny drop moment will be when someone goes to send Libra and it's blocked from a compliance perspective, from a security perspective, but that's when they'll have that Bitcoin penny drop moment. They will then understand why a decentralized technology and a decentralized currency like Bitcoin is so important. So for me, whether you like it or not, Libra as a whole, I think it's great for crypto and digital assets as a whole.
All right, so I'm very excited about Libra and like everyone else on the panel, but one obvious reason is because Facebook has almost 2.5 billion monthly active users. But let me take a different perspective and think what are the issues that may be very, very critical here. One is a regulatory pushback. And regulatory pushback comes from the people who may actually have best interest of customers in mind, meaning the whole area of crypto industry has had somewhat bad reputation for the regular person on the street, and a lot of ICOs turned out to be scams and frauds. So there is this idea that regulatory pushback comes from the good perspective. Second idea is data privacy. The problem with data privacy is that Facebook had serious scandals in the past, so now there might be a problem because Facebook just doesn't have that reputation that they can track your data and they can keep your data safely and securely. Finally, there is a major issue, but that's the issue with almost all stable coins, is that Libra is not exactly decentralized. It is pseudo-decentralized. What I mean by that, all verifying nodes are held by 21 founding members. So it is not permissionless, it is permissioned. And the whole idea of Bitcoin and the early cryptocurrencies was to take out central authority and take away the finance from the powerful intermediaries. Now, what Libra brings is bringing back this powerful intermediary right back in the middle of the finance industry, and thus enabling this intermediary to, to make excessive profits and charge exorbitant fees.
Just to quickly add to that, actually, I think the main thing Libra is showing everyone clearly is exactly what you're saying about the intermediary. You can't get the CEO of Bitcoin to testify in Congress. There is no CEO, right? You can't actually go and knock on some company's door and say stop working on Bitcoin software, because that's not how it works, right? And so for the first time, you're seeing on TV what actually happens when there's no decentralization. And so like Libra is a really, really good example of, instead of just this tech talk of, oh, well, this consensus system isn't decentralized, or this is a little that or this, you're actually seeing literally in front of your eyes when something is not decentralized, how it really doesn't work, because the government goes and just shuts it down.
And let me just get back, because this is a really good question. I forgot about this CEO of Libra versus CEO of Bitcoin. And that's why regulators are so misguided here, right? Because what they are thinking of is Libra or no Libra. That's from their perspective. But that's not what's going on. What's going on is Libra or some other cryptocurrency that will come later or that already came, maybe Bitcoin or whatever. So as a regulator, you want to have CEO of Libra to come to testify because you can't get Satoshi to come to testify. So in a way, regulators are shooting themselves in the foot because Libra is a good thing for the regulators.
They're using it as a scapegoat, basically.
Yeah, so they're using them as a scapegoat, whereas they should just say, hey, we can regulate these people, whereas we cannot regulate anyone else. So it's a paradox.
But what's happening with regulation in the US, though, it's been a massive wake-up with respect with the PBOC officially announcing. The PBOC have been working on a blockchain-based digital asset currency since 2013, 2014. But the reality is, I'm not sure how many people could stomach watching the Senate hearing on Libra. You've got the PBOC in China announcing that they're expediting the release of their fiat digital currency, whereas the hearing on Libra, you had people asking about the sexual orientation of the founding partners. I mean, it's a joke. It was absolutely ridiculous. And honestly, I'm not American, but I was extremely frustrated by watching the circus that was that hearing. And you've got, at the moment, everyone's favorite currency is the USD. And I think that with what's happening with the expedition of digital currencies around the globe, that might not be the case. It's definitely not going to happen overnight, but I think what's happening are polar opposites. People are looking to push forward, and other people who are very scared of this transformation, this digitalization, are actually going to hinder more than just their own economy.
I just want to piggyback off that. I totally agree about the hearing because if you guys remember or saw the headlines, Mark Zuckerberg said, we should let U.S. companies innovate. If we don't do it, China will. And then perfectly choreographed the next day, China was like, okay, let's do it. It was fantastic.
The timing couldn't have been better.
But I think one party that's missing from the conversation are the U.S. banks. So that's the obvious interest that's being protected by the suppression of something like Libra. It gives the banks time to advance some of their own agendas and maybe come up with a competing product. So we actually just released a little liquidity library that converts from Bitcoin to US dollar. And we're able to do that instantly, round trip, in around 3.5 seconds. And the reason for that is that the largest US banks have collaborated on a new protocol called Zelle. And I don't know if there are any Americans in the audience that use Zelle, but it is not advanced by global standards, but for the US it's pretty good. We can send as little as $1 and up to $2,000 per transaction instantly with no settlement fee. And it's the 5 big US banks that are supporting this. They have about a consortium of another 100 banks that are adding support. And unlike other banking consortia, this one seems to have produced a working product. We use it every day. It actually works. So I think what is Facebook's loss may be the Zelle network's gain at the end of the day.
Yeah. Thank you, Chris. I love talking about Libra because it's such a polarizing topic. And it sounds like many of us don't really consider Libra a proper cryptocurrency. So when it comes to proper cryptocurrencies, what do you guys think is a role that cryptocurrency will play in terms of shrinking the scope of government when it comes to traditional trade barriers and monetary controls? Amir, yeah, I'd love to hear you start.
So I'll let you go first.
This is right up your alley.
Don't anything wrong.
Thank you. That is very kind of you. Well, now this is very interesting and very complex question. So I'm going to just focus on part of it, because otherwise we could stay here till tomorrow, and I have a plane to catch later. So let's think about monetary policies. This is obviously depends whether we are talking about decentralized, fully decentralized cryptocurrency like Bitcoin, whether we are talking about pseudo-decentralized private cryptocurrency like Libra, or we are talking about central bank digital currency like PBOCs that they announced. So let me just start with the cryptocurrencies that are private, like Libra or Bitcoin. What they do is their effect on monetary policies can be similar to effect that we have seen with dollarization. Dollarization is basically when currency of the country is weak and people don't have faith in it. So then they start using US dollars instead of their local currency, like in Cambodia, Zimbabwe, even Venezuela, and some other countries. So what that does, and same thing would happen with Libra or any other dominant global cryptocurrency, is that people will have more faith in Libra than in their sovereign currency. The demand would be weak for that currency, that the value would go down, and inflation would go up. So more importantly, or maybe equally importantly, is that the government of that country is going to lose set of monetary tools regarding the short interest rate or quantitative easing or whatever other monetary tool they have. So that will further affect even non-adopters of the currency. So in short, the global private cryptocurrency would seriously affect negatively, possibly, potentially, the monetary policy. On the other hand, and I'll be short, I know I have tendency to go very long. On the other hand, a central bank digital currency is going to help with many things, with interpayment system, with auditing, it's going to help with money supply, and it's going to help with real-time data on money demand. So in a very, very short terms, very short answer is private cryptocurrency is not good, potentially, for the monetary policies of the countries, whereas central bank digital currency is going to strengthen monetary transmission.
I'll be a little bit, I'll disagree respectfully, of course, Amir. I think that there's two main reasons why central banks and governments are issuing digital currencies, and two only, and that's so they can tax it and provide better surveillance. I mean, I don't believe there's any other reasons why they're doing it. They're creating digital currencies so they can tax it. You look at jurisdictions like India, where very few people in the world pay tax because it's such a reliant on physical cash. Taking that away and moving it to a digital era means that they have to pay tax. And the second factor being around surveillance, it sucks and it's scary. You think about how people are finally waking up to the ideas of privacy and how much information third parties and governments know about us. Moving and being forced to adopt a state-issued digital currency from a taxation and surveillance and privacy perspective, it's not particularly attractive.
Well, so totally hear you on all those counts, but with technology, it can also be used for good and for bad. So one of the things about central bank issued digital currency is it allows for two things. One is automated taxation, and that actually eliminates tens of billions of dollars of compliance, the IRS auditing, all of that is programmatic, right? The second thing is it actually allows interest-bearing currency, which is actually one of the most useful things because most people don't have access to treasury bonds and the types of interest-bearing instruments that the accredited investor class basically
the financial inclusion.
Yeah, exactly. And so there are benefits to this actual technology. So a lot of people are fairly excited about it, but just like with any technology, it's ripe for abuse.
Just a quick, I'm sorry, I just want to quickly say, I was strictly talking about the impact of cryptocurrency on monetary policies. But I'm with you on policing. That is a huge issue.
So I think the business model of government seems to be changing. I think it's that they're much more interested these days in information. And to your point about the surveillance, the old system was to issue a currency, control monetary policy, tariffs. But when goods are digital, when people can move value and things without, let's say, the government knowing about it necessarily, it becomes much more interesting for them to become information traps. And so I think the governments that are excelling now are the ones that have really robust intelligence agencies. And in the United States, the intelligence agencies have become very politically important in the last 10 or 15 years in ways that they weren't even, in, let's say, 2005, 2006, when the Iraq War was being discussed. So yeah, I think there is a macro change in what a government is and what it does.
Cool. Thank you, guys. Yeah, sounds like there's both pros and cons to crypto when it comes to affecting policy, and sounds like it also depends on what kind of crypto it is. Is it a central bank issued crypto, or is it a fully decentralized one? So let's move away from policy for one moment here, and what do you guys think? How will crypto change the nature of cross-border investing and fundraising, and how does that impact the role of VC and their role in the value chain on a global level?
Yeah, so it's kind of like the internet, right? The original internet made anyone a reporter, right? The blog became the newspaper. The same thing can be argued with cryptocurrency and blockchain technology. Anyone can become an investor. It's a completely new playing field. And so a lot of both regulation as well as just classical startup behavior by entrepreneurs and institutional investors has to change. The issue is right now there's no precedent, right? No one actually knows what things should be like and why they should be like that. So a lot of things right now are during the frontier phases, and it is a little unpredictable. It's a little bit scary because no one knows if they're really doing anything right or wrong, or what those definitions are. But it is a really exciting time because that kind of technology shift only happens once every 10, 15 years.
I mean, what's happened over the last couple of years, specifically around initial coin offerings and token sales and so on, I mean, it was a pretty amazing period to go through. You had technology companies raising, in some cases, billions of dollars on the back of a white paper. It was insane, absolutely insane. But at the end of the day, the Kickstarter on steroids model, the technology worked, and there was no faster way to raise capital than to do an ICO. It completely disrupted VCs. I mean, no longer did you have to go and beg, borrow, and steal from VCs and give up an enormous amount of your control and equity to raise, maybe less than $1 million. You could literally crowdfund a project very efficiently, very quickly. Now, unfortunately, the technology was used by a lot of bad actors, and that's why we had this enormous bubble, which eventually popped. But you can't deny that the technology worked. And so right now, what we're seeing is the crossroad of people saying, okay, well, we know that it was a bubble, we know that it was used by bad actors, and we don't want to go there again. But now people are starting to try and merge or harness the regulatory controls with the technology, so namely security tokens. Now, it's a narrative that has been played about for probably over a year now, and a lot of people probably roll their eyes when I mention the word. And I think the technology piece is the least important challenge to solve. I think from a technology perspective, STOs are ready to go with the likes of quality partners like Consensus and Tezos, among others. But the reality is we're waiting for a lot of the regulatory clarity to be confirmed by jurisdictions. But it is happening. We saw last Wednesday, the Securities and Futures Commission in Hong Kong announced their virtual assets framework, and that includes security tokens. And they will actually regulate crypto exchanges as long as they include a security token on their venue. So I think, if you look at the libertarian roots of Bitcoin and decentralized currencies, a lot of people are very fearful of regulation. But unfortunately, if we want to move out of this $250 billion market cap, 158 of which is Bitcoin, and 90% of it's shitcoins that won't go anywhere, the reality is we have to play by some of the rules that are happening in the regulatory front. If we truly want a $1 trillion asset class in the next 12 months, you're not going to be able to do it without STOs and without proper regulation in place. Sorry to say.
Well, I think one of the issues with the fact that the ICO phenomenon was so successful was that it primarily puts the focus on consumer applications and B2C type of applications, something that has an interface that people can ooh and ah over, or an app icon. I mean, that really sells well to the retail public, but unfortunately what the industry needs is a lot of infrastructure that is not pretty and does not have a GUI and is not fun to raise money for necessarily. So I think the VCs will continue to have a role, but they might move up the stream a little bit, or up the vertical, I should say, more towards enabling technologies and less towards consumer applications. I think it's really hard to beat the Kickstarter model with something that's consumer-facing, but there's a lot of other work to be done and a lot of other money to be made. So I think they'll stick around, but they will move upstream.
A lot of good points raised here, and I generally agree with many of them, but let me take a different angle and think of the venture capital, what's going to happen to it. And one thing about ICOs that they did level playing field and allowed everyone to invest, but at the same time they created all these crazy scams and basically outright scams and frauds. Now what's going to happen with venture capital? Venture capital is they're going to fight back. But how they're going to fight back, they have to improve what they're doing right now. And what they're doing right now, maybe they're doing too much, taking too much of an equity, and they may have to think strongly how they can adjust that system. But also they have to provide more service to the startup companies. And that service should go through monitoring, through advising, and also through providing networks of other investors and other partners. So that's how I see venture capital role to evolve. They're going to become more specialized, and they're going to have to provide more service to startup companies. One more thing that I want to mention here is very important, is when you look at the innovation, and there are a lot of research papers on that, the most important factor in improving innovation is access to capital. And ICOs exactly provided that, access to capital. And similar thing happened in late 90s with all the internet startups. There was access to capital. Now, similar to internet, we're going to have a lot of ICOs, maybe 90+% that's going to fail, but then few that survive, they're going to be Googles and Facebooks and Alibabas. And from that perspective, I'm very optimistic, because I can see that this access to capital is going to lead to more innovations and more applications.
Thank you, Professor Amir. I personally, I'd have to agree on the side of on your perspective there. You know, when it comes to ICOs, it's really interesting that it changes the paradigm of the traditional paradigm of investor, operating company, and customer. ICOs make all of that one. You know, if you own a cryptocurrency of that network, you are sometimes the operator, you are sometimes the investor, you're also the customer, and so everyone's alignment is in line. So I think in that respect, it definitely is a tremendous paradigm shift when it comes to value creation of the investor, and I think that's part of where the VC will struggle to compete with. How do you compete with millions of people contributing to a network? You're one firm, so
you add value other than money.
Sorry?
You add value other than capital. That's how you play the game.
Yeah.
It keeps you honest, because
how many VCs do that though?
Money is not ultimately what you require now, and that's what VCs and among others that provide capital, and it's great. Capital is no longer the most important. It's very meaningful, but if you have a good enough product or service, it's not VCs that provide capital. VCs have to step up. They have to provide more than just capital. And to be fair to VCs, a lot of them do that already. Yeah. But it's going to place the emphasis on more than just providing, here's a chunk of money.
Yeah, I agree. There are some VCs that are very, very active in talking to their portfolio teams and helping with the way of introductions. And there are some VCs that kind of just sit back and let companies do their thing.
Yeah, exactly right. It's just kind of like the new internet. The original internet brought competition to TV channels, newspapers, all of these things, right? With social media, blogs, and now blockchain is the internet 2.0. It brings competition to banks, VCs, fundraising, and this is basically the backbone of this revolution.
Very, very exciting. Let's talk about hyperinflation, which is a huge issue. Hyperinflation puts pressure on governments in countries like Venezuela, Argentina, Turkey, and any number of countries. So how does that change as more and more people have access to Bitcoin and other cryptocurrencies? Maybe we can start with Chris. You've been a little quiet.
So
you've got a
you
mining
mean
background.
The prospect of hyperinflation?
What's that?
You're asking about the prospect of hyperinflation? Is it more or less likely? Or?
So like how does that change? So how does having people have access to other, non-sovereign, currencies affect the issue and the pressure that governments have with hyperinflation?
So I think one of the things that cryptocurrency, one of the things that any deflationary currency would do to a traditional fiat currency would be to make people aware of inflation, which they're generally not. And I think when you hear official numbers about inflation, at least in the West, it's always 2%. And yet when you look at kind of privately organized price indexes that include, maybe more realistic items that households have to buy and pay for, it could be more like 10%. So. And that's just the U.S. dollar. There's certainly much worse currencies. So I think when people realize that their savings are being taxed very subtly, they're going to be upset about it. And it would be hard for them to realize that without a competing product that was preserving the value of their work product. So.
Yeah, so just to add to that, I think when people say inflation is theft, right? You hear that all the time. It's basically because it's impossible to access those institutional grade, investment bonds and these things. These are totally out of reach of normal people that use cash, right? And so they really, like Chris was saying, they really have no way to actually protect against the inflation of their currency, which is various. Even in the US, it can be effectively up to 10%. One thing that Bitcoin and cryptocurrencies that are deflationary does is it finally gives an answer to people who don't have easy institutional access to bonds and those kinds of savings rates.
Yeah, I know I'm on a panel, I know we're meant to take opposing sides, but it's pretty hard to be pro hyperinflation, Han, unfortunately. Han, if you don't mind, given that we're almost, we've got 10 minutes left, and obviously the title of the topic is what are we going to see in the next 5 years? Yeah. I mean, I'd love to hear what you guys anticipate in the next 5 years. I'm pretty sure the audience will always love predictions, so they can tweet and say that we were wrong. But Han, maybe you can go first. As what do you anticipate in seeing in the next 5 years?
Oh, thanks. Yeah, I finally get to be in the hot seat. Okay, all right. I thought this job was going to be easy. I get to say, what do you think? And then what do you think of what he thinks? So...
Okay, well, maybe we let's start with the doctor.
I can start. So, I think we're really, really early. I think we're at the very, very beginning. We're at version 0.01 of blockchain and cryptocurrencies. Just in the same sense that when mobile apps first came around, we didn't know what the killer application was going to be. I remember when the iPhone first came around, I remember thinking, oh my God, it'd be so awesome if you can have maps and you could be able to know where you're going at any given time, and it could be in your pocket, and then I can punch in an address and know how to get from point A to point B. And it turned out that maps ended up being commoditized, and it was not that killer application. There was a lot of value creation, but nobody was really able to capture the value of that. Well, the data side is a different story. But I think when it comes to what I'm really excited about is what is not there yet, what we haven't seen yet. I don't think we have seen that killer application of blockchain. I'm waiting for the Uber of blockchain. Uber, nobody thought that Uber would be the killer application for mobile apps. The use of maps, but to connect somebody that is also looking to go somewhere with somebody that is already driving there. I think that's really, really interesting, and revolutionary, technology, and I think that's where we're going to see, and I'm looking forward to the next Uber blockchain.
So I always like to say last year that 2019 was going to be the year of the stablecoin, and it seems interesting because there's a lot of DeFi stablecoin activity. So the prediction seems to so far have some merit. One thing I want to say is what I see in the next year or two at least is more bullish activity in the DeFi space, right? These loans, these stablecoin projects, these are going to be very, very a big deal, because as there's more and more bearish sentiment on these old utility tokens, there's going to be more bullish activity on actual financial mechanisms, on real fundamentally sound economic activity on the blockchain. So that's where my bet is in the next 1 to 3 years.
Thank you, Sam. Chris?
So I would say I'm excited about open competition at the lowest levels of economic infrastructure. That's something that we haven't had. And if you draw an analogy to the World Wide Web, in the world pre-HTTP, there were networks, but they were private, and they mostly connected universities and defense contractors and other pseudo-governmental institutions. And when the World Wide Web launched, you had a whole new open playing field for products and services delivered over digital networks. So I think the world is kind of looking for the next industrial revolution. Global growth has been slowing. I think people have confusion about what is the direction of civilization, where are we taking this thing next. It was much easier when it was oil and steam engines. This is a lot more abstract, but I think what we're going to get out of it, and what people should be excited about, is the idea that you can now join a company that is working on really critical infrastructure for humanity, and by which I mean a settlement network that processes transactions. That's probably the most critical thing that we have on Earth today to doing business. So if you're a millennial or a Gen Zer, and it doesn't really grab you, the idea of going and working at some application or service company that's kind of just on the very top layer of society, you can now really get your hands dirty with something that's critical, and you can do it in a competitive way, in such a way that if you have an idea, you can take it to market, and you can compete with some of the biggest institutions, meaning central banks on Earth. So I think that's pretty cool.
Yeah, I'd agree. I think from Hans' perspective, we're still in a very immature sector, and to Sam's point, DeFi is obviously going to play an important part. Things like financial inclusion are going to be fantastic as well as a result of this awesome technology. Sometimes to look forward 5 years, we also have to look back 5 years. I remember when I left investment banking in 2013, this entire sector was a joke. I mean, that's how they viewed it. It was laughable that someone would leave traditional finance to enter the sector. And now if you look at where we're at today, some of the world's largest traditional financial institutions in the world are actually looking at this. And the narrative has also gone from, Bitcoin's bad, blockchain's good. And then we played that, and we see how that's come out. And those who have woken up to the fact that, private blockchains probably don't have that much of an enormous benefit as what we're preached. Blockchain was probably the most overhyped technology in the last 5 years since big data and cloud computing. But I think it's exciting to be in this space right now because a lot of the hard work has been done. A lot of we've knocked over a lot of the objections. Don't get me wrong, there's going to be an enormous amount of hard work and challenges going forward. But the reality is we're seeing governments now issue stablecoins. We're seeing central banks and regulators actually regulate the public blockchain space. So we're seeing regulators take adoption and regulate these public blockchains like Bitcoin. And I know that the institutional narrative has been played for probably 2 years. And it's probably very boring. A lot of people are saying, I don't believe it anymore. It's a narrative that's been used over and over and over again. But the biggest 2 points around institutional adoption was lack of regulatory clarity and lack of quality custodians. And those are almost fixed. We are seeing respectful, legitimate jurisdictions regulate crypto. We're seeing, respected quality custodians with full insurance come to fruition. And so those 2 factors alone, I think we'll actually see next year some of the pension funds actually allocate an allocation towards Bitcoin because it can be stored adequately. There is regulatory clarity. There's a playbook that people can work with. And I know that goes against a lot of the libertarian roots of where Bitcoin came from. But to think that we're going to actually get to that end state where it is perhaps potentially back to libertarian without following, and playing by the current rules that we have with traditional finance, I think that's probably a little bit naive and a little bit optimistic. So for me, the next 5 years, I see further regulatory clarity. I do see decentralized finance and decentralized technology still playing a very core part. But for institutional adoption, it's the likes of regulatory clarity, quality custodians, and more professional players entering the space, of which there are very few right now.
I agree somewhat with this statement. Bitcoin is bad and blockchain is good. But really, Bitcoin itself is not bad. Bitcoin is amazing. What is bad about Bitcoin is volatility in its prices. And that is really driving this whole uncertainty and risk in the industry, right? So Bitcoin is great, but the investing has somehow clouded our opinion about the technology itself. And from that perspective, I think the technology is much more important than Bitcoin or any other coin from that perspective. Second thing that I wanted to mention is I believe that we think right now we overestimate a short-term impact of blockchain technology, but I think we underestimate the long-term impact. And that goes back to what previous speakers were saying, is we don't know what we don't know. So there is this huge number of unknowns. Who could have ever imagined in '95 when internet came around, who could have ever imagined that Netflix would be such a power and that would be basically producing movies and TV shows and taking business from the movie companies? So that is something that I can see conceptually, but I don't know what it's going to be, right? So as I said earlier, way more than 90% of these ICOs and all these startups and all these applications will fail. But then we're going to have a new Alibaba, new Netflix, and new Facebook. So I'm just going to reiterate this. I think we overestimate short-term impact. When I say short-term, I mean next 3 to 5 years. And I think we underestimate long impact, and I mean 10 to 20 years.
Well, thank you, panelists, for your amazing insights. Everyone, we're out of time, so let's all give us a big round of applause to our amazing panelists for tonight. And thank you guys all so much for joining us. We hope you enjoyed the discussion.